Good afternoon, friends. This is Marv Eisen from Timeless Dollar Trading Academy, and today I want to talk a little bit about price action. We've all heard the term price action and how important price action is to keep an eye on, to watch. But what are you supposed to look for when looking at price action? The bars go up, the bars go down, prices move seemingly erratically. So let's talk about price action. You're looking at my chart of Friday, May 19th, and I have my trading zone drawn on the chart, and I also have a horizontal line denoting the previous day's close. And this is how I set my chart up, together with the stochastic, and I use a fast stochastic 733. And this is how I have my chart. I don't have any other indicators on my chart, but the indicator being price action, which is what we're going to talk about. So here we are at the beginning of the day. Now, I realize hindsight is 2020, and we're looking at the entire day of May 19th. But just take a look at what you see at the beginning of the day, just at the time that the market opens. Okay, so we know that the market closed on Thursday right over here at 42.11. And the market is opening up right over here at 9:30, I put my candle there. Market's opening up at 42.19. Market opened at 42.19, 8 points above the previous day's closing price. Now, 8 points is not a lot. There's 4 points between each horizontal line on this chart. But 8 points, if you're trading E-minis, 8 points is $400. So it's not an insignificant sum. Now, why do I look at this difference between where the market opened and where it closed the previous day? Because this represents a gap. And when the market opens gap up or gap down vis-a-vis the previous day's close, you have to ask yourself, or you should ask yourself, why? What for? What's the reason for that? Okay, so we don't know the answer. An obvious answer would be, well, the market is opening up at a higher level because something happened to make it open up at a higher level, to drive prices up over the previous day's close. What was that information? What was that instance that caused prices to rise? And if you don't see anything, then it could very well be that the market is taken up in order to be taken down, or vice versa, if the prices open gap down. So that's the first thing to look for just before the market opens. The second thing to look for is, or to be aware of, I should say, is the most unsure time of the day. The time of the day where you know the least bit about the market is during the first half hour of the market open. Because here we have nothing to look back on in terms of getting some historical reference as to the day. Surely we can see, looking back from 4 p.m., we can see, well, prices, look where they went. But at the beginning of the day, at the open of the day, this is the time where we have the least amount of information and certainly no hindsight, except, of course, for the gap. So that leaves us with looking for price action to give us a clue as to where prices might be heading. Now, here, even if you don't have Taylor's trading zone, and notice that the Taylor calculations, prices stayed pretty much restricted by the Taylor resistance line up here at 42.25. And as time goes on, we see that prices are also putting in a support level at about 42.18. So prices are moving between 42.25 and 42.18, and they're holding there for most of the day. So price action is giving us an indication of where prices should trade within a relatively narrow range. But then look over here at about, an hour and a half after the market opened. This is the 11 a.m. candle, my friends. And right here, just after 11 a.m., prices departed from the range that they had been trading in, from 42.17 to 42.24. So prices begin departing from that range. So doesn't price action tell us market has broken that range? So this is something we can glean from the price action, from looking at price action. That's my video for today. I don't want to go further into price action. just by looking at the chart, seeing where prices open with relation to the previous day's close, looking at how they move, whether they're in a restricted range, we can trade that, or when they depart that range. Anyway, thanks so much for watching. I'm Marv Eisen from Timeless Dollar Trading Academy. Trade safely, use a lot of patience, and I'll see you in my next video.